It's Friday, July 31st, and this is of course the video log that takes 30,000 to a million. So today I want to after I show you through the account, I want to talk about the 3 underperforming sectors that you can find some deals right now, and maybe be a good idea if you're looking for undervalued to slush some money that way. So let me get into the account real quick, and then I'll tell you what these 3 sectors are, and some comments about them. I think it's kind of funny and ironic actually, and kind of ties into events that have happened before, and we're just kind of circling back around now and paying the price for it. You'll know what I mean later. Right now, you're probably not gonna know what I mean. You're just gonna staring at my weird lighting. But I'm standing at $100,876 because Apple earnings came out, and I was actually down a grand before market close, and now I'm up like 3 grand or something like this after market, which is absolutely crazy. I mean, Apple I think went up like $25 per share or something like that, and they're even talking about splitting the shares because they're getting so pricey. Makes you wonder why companies like Amazon perhaps haven't split, or Google. So here are the positions. As always, you can always pause your video player and just look at the position yourself if you want more details. Here is the symbol of the position, the security, then you have the strike price, whether it's a put or a call, and you have the expiration date over here, the number of contracts, and whether it's a sell or a buy. Most of these contracts are going to be sells because I sell a lot of options. In fact, all but one are sells. Thankfully, I'm still holding on to my Apple call position, which is going to appreciate greatly come tomorrow, meaning today, this morning, Friday morning. You're probably watching this on a Friday, so my account will most likely be well over $101,000, which will put me at a record high. This is my record high currently, and I'll be scoring another record high probably by the end of Friday. Not to mention that gold and silver also upped overnight, so it's going to be a monster day for me, and I can't wait to score another record high on other accounts as well. And that's great. So here are my positions. You can pause at any moment. You can see I have a lot of variety of options. I've sold about 40 contracts, and I've bought 1, which is more than the positions that I have, equity positions that I have, which are about like 20 or something. So you can see here Apple appreciating 2,200 after hours. Let me click on that so you can see what's going on here. It's currently sitting at 409.50, so that's almost $25 up, or 6.43% after hours. Make that 7.5 if you include the regular hour appreciation here of the stock. It's very interesting stuff. Okay, I really hate how this resets. I haven't figured out how to fix it yet. But everything else was red. Today was definitely a red day. Started on Tuesday, and there's been a lot of selling off, just kind of at the surface, getting some of the foam off of some of these positions. And you can see not virtually, everything else I own is red here, except many of the options because they're call options, right? So I'm going to get liability erased as the underlying asset devalues. But it's not by much, you can see these positions haven't increased that much in value. And of course tomorrow some of the, especially the precious metals, will reverse. And that's it. Those are my positions. If you want to look at the account tab, although it doesn't really give you anything, but some people like to see it, this is what it looks like. 10K of cash here, stock and options 90K. But it doesn't really tell the full story because, of course, I've gone a little bit in debt in order to put up collateral for put options that I've sold. So it's not very indicative of what the account snapshot actually looks like. Now, that's the account. This is the week graph if some of you are interested in that, to see more what my account is moving like. And I always actually like to compare it to the S&P. So why don't I compare the 1 month to the S&P? I like to use SPY as a proxy, SPY, which is the ETF, the Exchange Traded Fund, that tracks the S&P 500. So I'm up 6%. SPY on the month. What is going on here? There we go. SPY on the month is 5.47. So beating the market by a little bit, and tomorrow I think that spread will widen. 3 months, 14.6%. I don't know if I'm beating on 3 months. Oh, excuse me. I actually do know. What the heck? I'm 38%. It's huge. And of course, I'm also beating on the year. 25%, 26% almost. Whereas the market, the S&P 500, scoring a whopping 8.5%, which is not too bad. What about NASDAQ? It is the QQQ, I think. For 1 year. Definitely getting beat by the NASDAQ. They're pretty powerful players. I only really have one of the big companies, which is Apple, that's pulling everything. That's kind of my tech play there. But that's okay. You know, NASDAQ wins so far. I'm just trying to beat the S&P 500. Really. That's kind of my benchmark. It's industry's benchmark, and it's important benchmark for me. All right, without talking any further about markets, let's dive into what I want to talk about, which is the 3 undervalued sectors. And actually, I want to show you some graphs. I'll go back to the account in a second and show you what I'm talking about. So the way I see it, there are only 3 really undervalued sectors right now in the markets, which are: 1 is real estate. And it's funny that real estate is undervalued because we had a real estate boom, right? And then we had a reflation of the real estate bubble. And it's very ironic. Not ironic, but it's just funny. It's of interest that real estate is the one thing that's not reinflating after this virus attack on the economy and on the people, of course. And I'll show you how real estate is not acting well, okay? Let's go and just look at a real estate index. How about we use... Well, let's start with VNQ, which is the REITs index, right? So that one is about on par with what it was, 5 years ago. So that one's gone nowhere, but that's not that indicative because they give out a lot of dividends and things like that. How about XLRE? That hasn't recovered on from the February high, but it's about 2018-19 levels. Let's see what else we can find. And the iShares index is also, about flat 5 years. So it hasn't really recovered. Like, this sector is not really booming like the technology sector, or hasn't even recovered as much as the S&P 500 or other like broader indexes. So real estate is definitely down. And if we look at individual companies, like some of the ones that I'm following, I mean, first of all, the mortgage trusts are just doing terribly bad, right? Like, let's take NYMT. Still hasn't really recovered any of its losses here from the March drop. And it's not alone. I mean, there's the, Invesco mortgage down huge. Look, this is a lot of these mortgage trusts are just getting they're decimated, literally. Right? This one's like, I don't know how many, 78% down. So they're not really doing it very well. So real estate, and you can take a look at it 2 ways. I mean, you can take a look at it like, oh, it's coming down to fair value. And this is, of course, misleading because a lot of these trusts hold capital structures that are very complicated, and so they get hit in ways where they suffer a lot of capital loss, and so it's not really like tracking the price of real estate, right? It's not tracking the price of real estate, but what it is tracking is the value of real estate financial ingenuity. All right, it's tracking, it's giving feedback on the experimentation of the complication of mortgage related and real estate related capital structures. Alright, sounds kind of complicated, but um, it's voting, it's validating, or it's weighing in on the craziness that started happening before 2008, and it's like we're still suffering from that. Okay, it's kind of like we had a cold. Okay, it's very interesting that I bring up a virus in this discussion, but let's just run with it. All right, so like we had a cold in 2008, and then we just pumped ourselves with steroids and adrenaline and everything else and caffeine, and took some coke for like 10 years, and now we're having a relapse. We haven't really cured the cold, we're just drugged up. So that's kind of what it seems like to me. So you can think of it as like, all right, well, this has taken a really big hit, or you can think of it as a sign that these real estate related securities are really getting what's coming to them. What was coming to them from way back from like 12 years ago, 10 years. So let's take a look at something else. The other undervalued sector is, or you can take a look at undervalued or corrected, is financials. So what was it? XFL, what was it? Financial, XLF. Financial sector, XLF is just the ETF for the financials. You can see it's recovered to about half of the drop that it experienced in March. These levels we're seeing, and that we see today, we're seeing only all the way back here in 2016. So in 4 years, it's gone nowhere, right? Financial sector is going nowhere, and that doesn't even tell the complete picture. I mean, look at this. Let's take Wells Fargo for example. Wells Fargo, which I'm actually looking to get into right now, so that should give you a hint that I think it's a bit undervalued. So look at the 5 year here. After the initial March drop, Wells Fargo is not even close to recovering. In fact, it's scrubbing at its all-time lows. I mean, this is a really big drop. This is 57% down. It's crazy. So let's take a look at a bank that's in better shape. If you think, all right, well, yeah, but Wells Fargo's had problems. How about Bank of America, right? Bank of America, 5 year chart. Look, it looks like a little bit like the financial sector. I mean, it hasn't really been this low since 2016. Well, maybe briefly over here in 2018, but that's besides the point. After the March drop, it hasn't recovered even half of this. It's recovered maybe a third, not even, of what it lost during the virus drop. And what about JP Morgan Chase? JP Morgan Chase, same thing. Recovered maybe a quarter, if that. Right? It's really low here. And so the financials, I mean, partly they're a good deal or have had large corrections because they're intricately related with real estate. Okay, it's through the financials that the real estate is able to conjure these types of structures, and they're basically working together. So I'm not surprised that this is happening in unison. And you could try to get in here. Maybe they've corrected their mistakes. Maybe they've learned their lessons, or they've changed their ways, whatever you'd like to believe. And perhaps they'll see, better days ahead. But many are skeptical, obviously, judging by the markets. Now, the last sector that's undervalued is not sector. It's not really a sector. It's just a specific commodity, and the company's oriented around it, which is, of course, oil. Now, we saw that huge negative futures pricing back in March, and ever since then, oil pricing has kind of stabilized, I don't know, around $40 or something. But the companies haven't really recovered that much. And if you look at some of the big companies, they're surviving okay, and they'll survive okay moving forward, but some of the smaller companies are having a hard time, and a lot of countries are going to have a hard time as well. So let's just go through the couple of big companies here. We have Exxon Mobil, and that thing is down. Look at this. I mean, 46% in the last 5 years. this is a really big stock for many dividend investors. Okay, a lot of people who want to have some exposure to energy, to oil, they pick a stock like this, and this stock is just murderously down. I mean, it's not even close, and it hasn't even recovered half of what it lost through March. Ever since January, it's been in a very steep fall all the way to March 20th or so. Then it hasn't recovered almost anything. So Exxon Mobil in really big trouble. And the other one I like to look at is Shell. And Shell actually have some put options sold against it, so I'm trying to get in. I want to have some exposure at this kind of pricing. And but it looks like it's really being punished by the market as well, just like Exxon Mobil. It's down 43% in 5 years. I mean, think about it. Like, you put in a thousand. Let's say you put in $1,000 in one of these companies, and now after 5 years, you have $600 or $500. You've lost half in 5 years of investing. Wouldn't that be depressing? I think that's pretty depressing. So, whoops, excuse me here. And but yeah, I'm kind of looking to get some exposure on this. I mean, commodities are always very risky to trade, to own, invest, and trade, and all that. But I kind of want some oil exposure at this point. It looks like it's not recovering, but I think it's going to make a big return later on, maybe next year or a couple years from now, if I hold it that long. But it seems like it's very unloved by the market. So that brings us to the summary. Okay, with everything booming and tech really leading the way, and the FANG stocks pulling the rest of the markets up, containing more than 25% of some of these indexes, the major companies like Amazon, Apple, Facebook, Google, and I don't know, is Netflix in the conversation? And I guess Tesla is one of the biggest companies now too. The thing's got like 300 billion market cap. That's insane. So all of these stocks and Nvidia and AMD have had a huge rise as well. If you check those stocks out too. So tech has really been pulling the way forward. So it seems like everything's going up, but there are really a lot of weaknesses still underlying. Weaknesses within the market itself, like whole sectors, entire sectors like financials and real estate, and commodities like oil and all of that associated with that. By the way, oil has had some financial engineering as well, and the banks facilitated that too. So the banks are suffering a double whammy from the financial engineering from mortgage related assets, real estate related assets, and oil related, I don't want to call them assets, but vaporware. Okay, so it seems to me that, it's all coming down to kind of like the market's really not validating this anymore, and they're kind of running out of patience and trying to put their capital behind other horses, right? They're tired of funneling money to horses that are never really going to materialize, never going to win a race for them. So it seems like the market's definitely voting for tech and looking for new opportunities to allocate capital. And that's the way it is. Maybe I can throw some money on that old horse, see what kind of returns I get, since I'm really looking to collect premium. But it seems like it's very stable. I want to collect premium on very undervalued assets. But hopefully y'all making a lot of money there. I don't know. Let me know if you had a big day. I'm always interested to know what other investors are experiencing in these markets and how they're faring through this interesting, market situation that we are in. And let me know what you're up to. I want to leave it there, and I want you to do something before you click the X button or whatever you're clicking on there. I want you to tell me, okay, there's a watch. Let me pull up a picture. I'll do it while I talk. There's a watch brand that I'm having an argument with my friend. I want you to pronounce. Okay, tell me how you pronounce this, the name of this watch. Okay? Let's see if you can see it here. And alright, this thing right here, you see it? I want you to tell me how you pronounce the name of this watch. It's very important. Write it in the comments so I can settle an argument. Okay? All right, I think I'm gonna end it right there. I hope y'all enjoyed this. I don't know if you found it useful or not, but I'm gonna end it here. Probably make another video on Monday. All right, peace out.